Hi, my name's Andrew Lockwood and I'm one of the coaches.
Evening, boys. You probably didn't hear that. I was just mid-rant then. I'm just trying to work out a final few things on a new computer before I order it. So, still got my old one. I'm still wrestling with it. I mean, it's nothing wrong with it as long as it's working 90% of the time, but it's the other 10%, right? That it becomes a little bit finicky, and it's just a hassle. Everything's a hassle sometimes. But yeah, look, very interesting open today. What we're seeing is first saw, sort of serious US dollar weakness in 2 weeks. Luckily, we were prepared for this. We'd set up a lot of limit orders, remember, on last Thursday. So Friday didn't do too much for us. We didn't get into anything. But some of these orders that we had linked from, literally, we posted these trades back on Thursday, have been filled today during the US dollar correction. So we're looking for, around about a 200 point pullback in the dollar yen. We got that 111.50 area was filled. Let me know as well if this stream quality is okay, otherwise we have to change a few things. Looks okay from what I can see, but in the past I've said that the video starts delaying. So, but what we're looking at here is dollar yen testing pretty key level. If you look into it, it's actually the exact, this level here literally is that exact same peak from the previous resistance. So this is really nice example of resistance becoming support, and this is the main reason I was buying this area, is I suspected that this area would become support. Now it is hard to know whether the US dollar correction is done. Okay, so that is always a gamble when you're buying into deep, sharp corrections that begin in Asia. You're like, well, I mean, if they do this in Asia, perhaps Europe and America are going to go significantly lower. It's just that if you look at what's coming up this week, you've got NFP and you've got OPEC and you've got Italian referendum. I just don't know how the euro is going to manage a significant rally in that sort of environment. So if anything, I suspect that if there's something that's going to short circuit this, it's going to be the euro. I think dollar yen is keen to get back on its rallies, straight away almost. And it seems like fresh buyers are, around the corner in this particular pair. So not just us, but I mean, it's a pretty convincing little story. The yields are still very strong. But if you are looking at what's going on in the yields, we have to keep an eye on this. This is the 10-year bonds. So when the bonds are bouncing, that means the yields are falling. This is what you have to watch at the start of the US session, because the start of the US session is going to be key here to how the market moves. If you see stock markets break down even further, and if you see, say, bonds back above 12.6, that would that 12.6 level is the level we looked at last week. That would really throw the US dollar rally off its trajectory. So you might see some more significant losses if that was to happen. And so the key point is coming up relatively quick in this relief rally for the euro and the sell-off here. I mean, it's a key point for the US dollar, right? Is what happens today in the US session, whether we can get back above 126, or to see whether we're going to have a bigger move here on the US dollar. I suspect we won't, right? So that's why I've been piling into US dollar. Short Aussie, short euro, long dollar yen, long dollar Swiss are my trades. US Swiss still, but US Swiss is not really moving. On some level, I actually hope that I'm wrong. I really actually want to get some nicer levels on dollar yen, but I just don't think we're going to get that. So we have to play it by ear. It's I mean, the only thing really which doesn't make sense here is that the market did all its move in Asia on Monday. It's like, well, that's not normal. That's not normal. But there isn't a story behind this, really. I mean, what? Clinton recount? That's one thing. I can't really think of too much more that would start this. I mean, month-end flows was floated around. That's serious, I suppose. Month-end flows is something that, if you're in the new premium room, RS was teaching about. RS is a professional trader for like 20-30 years, and month-end flows are what happened in the last couple of days of the month, and it's to do with large equity funds having to rebalance their weightings, right, of currency, because they end up being currency neutral. Now, what that means is if one particular indice has outperformed other global indices, in this particular case it's the US dollar, and the US stock market, they've outperformed. Now, what does that mean? It means that when they come to rebalance, to be currency neutral and to keep that same weighting, they have to sell US dollars. Okay, the underlying asset is increased in value, so relative to the others, you can sell some US dollars just to be the same amount inside their portfolio. Alright, so if that is true, and if that's like something which happens each month, then there was a huge discrepancy between what happened in America last month in the stock market and the rest of the world. A massive rally post-Trump in November, and so they would have to do significant US dollar sellings. And so the theory is that they would front run that by starting to sell today rather than Wednesday. And I suppose that makes sense, right? If you know that there's a huge wave of selling coming in the next couple of days, then why not get involved in it early? If the market's already overbought, that just adds extra to it. So perhaps in the next 2 days it's going to be much more volatile than we suspect, and won't be as clean as buying dips and using previous resistances and supports as targets. The main way, if I actually am not that keen to be buying dollar yen, even though I'm talking about it so much, I'm actually more keen to be selling euro. I think euro is going to struggle very. I think euro will struggle on Friday and Thursday into, but not just the NFP, but into this Italian referendum concerns. So if things get more serious, then I look more seriously at selling the euro a little bit more aggressively. Now, the Italian referendum is something we look at Thursday, and on Friday we'll probably going to be doing NFP stream again. But the Italian referendum is something which would open up the door to potential political risk in Europe to become the main thing in the market again. And at the moment, it looks like the no vote's winning. So the polls are suggesting that, and that means more volatility ahead for Europe. I mean, it's not a straight up we're going to leave the Eurozone vote, but it opens the door to that sort of vote in Italy. Let alone you got concerns about France, a little bit tempered over the weekend because of such a dominant victory by Fillon, but there is that's a source of major instability coming forward, and you can't underestimate that. So all things being considered, why not sell the currency involved in that? Yeah. Yeah, definitely. In terms of the what euro pair, we'll focus on euro USD. Euro yen makes a little bit of sense too, but euro pound's too dangerous. Euro Aussie is a little too dangerous, though fair. Yeah, Euro Aussie, perhaps. It depends what you suspect happening in the stock markets. If stocks fall too quickly, then the Aussie will underperform, so it won't be clean. But yeah, selling Euro Aussie is clean. We'll see. We'll see how the market wants to play Euro towards that 107. That's the level I really care about, 107, 107.50. Then we can get, really silly levels towards 108 if we can get past it. But I just think this is going to be hard hard work, even no matter how weak the US dollar gets. There's nothing to back up this US dollar. I think it's just profit taking, right? And so the same forces at play here. The June Fed rate hike next year is getting a lot of play. That story is just hard to stop. The Fed officials have to come and temper that. Now, if Fed officials come out and temper that, yeah, maybe we've got ourselves a little bit of more sustained US dollar rally. Or range trading. Yeah, range trading is another option that the market can settle down into a new... Let me know if it's back and working, guys. Don't have enough power, Scotty. And this computer was really good 2 years ago, 3 years ago. Let's stop the camera. The camera, it seems to be the full. That's my anti-stress device, Renko. Actually, quite a new little mod, but it ain't a vape stream, so I'm not gonna show you. When I get my new computer, I'll show you. Won't show you in black and white. So where was I? We're focusing on what's happening here with the oil. Now, oil is getting punched on the back of this seemingly lack of enthusiasm from Saudi Arabia. Without Saudi Arabia, you don't have a major... You can't have an agreement. You can't have an agreement which is going to boost the market. You might have an agreement to stop production. You might have an agreement to potentially get to, I don't know, a small OPEC cut, but without Russia on board, and Russia, coming through and saying that they're going to cut with OPEC, and there being some sort of willpower shown here, I just don't see how we're going to get a sustained oil rally when the proposed cuts are so small anyway. I mean, perhaps what the market was looking at was some sort of solidarity for OPEC. That way we can get up to that $55, $52 mark. I think, right now we have to dial back our expectations here of what we're going to get out of OPEC, and I think it'll be a really big surprise if we get something involving Russia now, given that Saudi Arabia is not meeting with Russia on the sidelines today. It just doesn't make sense to me that you'll get a big deal without that. I think, if anything, they'll try and kick the can down the road, talk about progress, but nothing done yet. So it might lead to some, they might really talk it up, saying we're really close to a deal, including Russia, but we haven't got it there yet. Perhaps that doesn't lead to too much heavy selling and they haven't done anything. So jaw-burning specialists could become the main game, because they're disappointed on every OPEC meeting in the last 2 years. So, they could actually come through with that as some sort of compromise to get over the short term. Now, if that happens, then perhaps it will get painted with the brush of crying wolf, and the market will take a more negative tone. And you've seen that every time the market has fallen in the last 3 or 4 months anyway, there's been rumors of a new deal. So there's another rumor here, right? This is when the rumors came out. New deal. Yada yada yada. Big push back up. Markets pulled back. Then you got Saudi Arabia not coming to meet Russia. What sort of rumors will they have if they disappoint with the market? They can't just straight out disappoint saying they're not going to do something. They have to be half positive. If they value the the oil price at all. yeah, no, it's definitely for me. It's more focused on the downside than topside. But we'll go into that a bit more when we get more stories out. Say tomorrow we might focus on it, because we should get the answer on Wednesday, and Wednesday might be too late on the stream. Now, you would have seen the launch of the premium room today. Now that's basically a place where if you've got an account with Nick and have enough money in one of those IB accounts with one of the brokers from Forex Signals, then you will get access to that premium room. With that comes access to more serious FX chat, and so it's less banter, more straight up, this is what the market's doing. Some pretty serious traders in there, and you're going to get a response to your questions in a more timely manner, and so it's much more focused on the more serious traders. And if you're serious about learning, then definitely have a check out of that. I don't know if there's any free trials or any way to get access to it without it. I might sneak some peeks in there every now and again from the stream, but I'll have to get okay on Nick from that. But yeah, basically Andrew and Jason are going to be there giving lots of advice. I'm going to be there. A lot of other good traders I know are going to be there. Basically, it could become the premium place there to hang out, like just for even more serious traders who just want to hang out in a place where you get that structured sort of environment that there's all shop, no silliness, just all shop. So I'm really excited by that, and I will be much more active there than I am in the public chat, that's for sure. But let's so far it's not going to affect this stream, so you're still going to have this coming through every day at 9 GMT. My sound loops, don't you start with that. Just check you haven't got two instances of it, yeah? Alright, but if you want to really, let's have a look at some of the bank research. Obviously everything's focused on Italy and the OPEC meeting, so must have read 20 reports based upon that earlier today. Everyone's saying the same thing, looking to buy US dollar again on dips. So I don't know, that's a little dangerous in itself when everyone's trying to do the same trade. But it's not necessarily the case that it's not going to work. There is a reason that conviction trades work if there's enough fundamental reasons below it, and it might just be that we have more time to run on it. You want the CS morning report? Oh, thank you, Street Fighter. That's one that we look at a fair bit here, actually. That's it's not a bad report if you want to check the daily technicals. Trust this stallion. Gonna have to keep a close on it. Might even put my stopped entry on. Yeah, so what I was talking about there, we think OPEC will want to save face with some agreement. That's what I think we're going to get, like a half-assed agreement, so the market doesn't completely implode, but not the sort of Russia OPEC wide cuts that everyone, was expecting just last week. Okay, this is interesting. They see the no vote is largely priced in the euro. The reaction to the unexpected yes vote and less clear. Looking for consolidation. Yeah. Consolidation. The level on the US yields that I've been told is the level to watch is the 2.5 level. So I think we're at 2.35 at the moment. So if it gets to 2.5, that's the level that really would start to become key. This is on the 10-year. This is the yields. So we've still got a little bit of room to move. Perhaps we might get there later as we move into the home stretch into the FOMC. The FOMC could actually end up being very US dollar negative if they don't indicate that they're going to be raising anytime soon, or if they dial back their hawkishness, or if they say we're going to step back now and check what the reaction to the rate rise is. You've heard that from a couple of doves saying it could be one and done, but let's just see how it develops. It's never as simple as just straight up months of US dollar buying. Not in the last few years. US NFP, I've never seen such a unimportant US NFP. It's too late now to stop the Fed raising rates. It would have to be negative basically to stop them raising rates. Chinese PMIs are definitely important for the Aussie. So those are other two little things to watch here. It's quite a big report. I'll have to go back and read that later myself. Oh, boys must have data. I didn't know there was anything scheduled for the pound. Sorry, let me just check what's going on. I don't know what's going on there. Let me see. Yeah, nothing in the Reuters room. Tell you what, if there's something in the premium room already, it will be literally fast. This only happened in the last couple of minutes, so nothing there either. I mean, it could just be stops. Market got a little bit ahead of itself. But usually there's a story behind those sort of moves. Month-end flows aren't supposed to be pound negative. Yeah, maybe just. I mean, it could just be a random order coming through, but it's sharp enough that it seems like it could be something else. Yeah, it could be that. What's going on with the euro pound? So every month, euro pound gets more flow than most in the month-end flows. Now, I'm not an expert on why this happens. Something to do with farm subsidies, from what I heard. But definitely, if I can see some sort of reasoning behind it, and if they do get it back to being that, then we'll talk about what that is. I'll find out myself, right? Because I'm interested to know what causes some of these things too. I mean, look, it's not the hugest move in the end of the day. We're getting a little excited, aren't we? A little excited. And it seems like there's no follow through, so perhaps there isn't a headline there out. I was just making sure there's not a headline on the back of or a Brexit headline, right? Because that would be something you need to know. I got a little bit of pound. Alright, but back to the reports. We'll check that later. So let's focus a little bit more on the euro, right? I mean, we've been talking a little bit about this Italian referendum. The Italian referendum, the US 2-year German European yield differential, US yield differential is getting bigger. Year. So this is a story we're talking about here. Fillon won the second round of French Republican primary. So this is the Conservative side. That's slightly positive news over the weekend though. So they're going back to the Deutsche Mark sort of prices. So there is a chance here that we do go substantially lower if that continues to widen. Remember, you do have the ECB buying bonds, right? For at least another year. We're going to find more information about that at the next ECB meeting. They don't care if the euro falls. They would like the euro to fall. In fact, the US dollar rally may end up being slowed down much more from the US dollar side. Namely Trump. If he starts an anti-US, anti-dollar strong policy. mainly by probably going after China. But you know, his whole thing is about having jobs in America and strong manufacturing jobs, right? You can't do that with a really strong US dollar. I should be more interested in European politics. It's hard with the circuses that go on there. It's hard to get too into it for me anyway. Also, the each country has a different system to what I'm used to, right? So it must be much easier for the Europeans to trade some of these new emerging stories here than it is for Australian traders. So early elections is going to be the main risk there that starts Italy getting back on the radar. And the rise of any anti-EU party into those elections. Which is pretty likely if Renzi resigns. I'm stealing something from Live Squawk here. There's a bit more selling coming through on the pound. It's not OPEC related, but that's just something coming through. Keep an eye on anything more headlines like that. Now, my Twitter feed of 100 or so traders hasn't got anything here yet. I mean, usually some people even make up stuff, right? Quite odd not to have anything. I'll keep an eye on it. Yeah, that's not helping the US dollar rally though, that's for sure. It's not bad for my dollar yen, not bad for my positions, but I would like to know a little bit more about what's moving that. Alright, we'll keep an eye on it. I'll one more little report, and then we might call it a day, guys. Sorry that I had to restart the stream, and we'll try and get that sorted out next couple of days. We haven't looked at the technical update yet, so this could be important just to, as a refresher there, just to know on the top side where the resistances are, how close some of the 200-day moving averages are, namely something like the Australian 200-day moving average. Alright, so 75.20 would be a really nice little level to sell into if we do get another little leg here in US dollar weakness. There's only one in play there, but definitely some of the other supports are pretty close too. In terms of dollar yen, there's some pretty big support underneath on its way towards 110. So I'd be looking at either of these two as nice little levels to buy off as well, if there by chance happens to be more US dollar weakness later today. I wish I could tell you what happened with that pound, guys. I'm mystified myself. I mean, at the end of the day, pound doesn't need many reasons to fall, but I suspect we'll find out there was a large flow based on month-end flows or some sort of deal. Some sort of demand there for euro pound, it looks like, but you know, if I find out, I'll let you guys know inside the room. Other than that, I'll be back tomorrow at 9 GMT. We'll see how this US dollar sell-off, if it continued in the US section. Those key levels that we're supposed to be looking at here, and I want you guys to focus on later, is whether, if there is another leg of US dollar weakness, whether this US 10 years can get back above 126. Right, that would lead to a little bit more US dollar weakness, another leg. Otherwise, if stocks stabilize, start to move sideways, dollar yen starts to rally, it could be over already. You know, one day, one session. But I'll update you tomorrow about how it unfolds. I'm hoping for a little bit more US dollar weakness to get some better entries, but it's unlikely to happen. Not unlikely, but just now it's not as clean, right? It's not as the fact that Europe was so unwilling to get involved here means to me anyway that we might have a limited pullback. Alright guys, good luck.